What's up everyone, it's Caddy with Money Vesting. Welcome on board for another Market Open live stream here. We are all set and good to go. We've got the QQQ down, well, more or less flat. It is getting bought up, so not as bad as what pre-market was earlier. So we are getting a little bit of buying momentum once again. So we're only down about 3 basis points, but more or less flat here. We've got the Dow down a little bit over 23 basis points. We've got the S&P 500 down about 27 basis points at the moment. So if you guys can hear me and see me, just want to make sure that everything is working well. So just give me a thumbs up if the audio and the video is working well. We're in the final week of September, last 5 days, and of course this is the end of third quarter as well, so end of Q3. So we are ready. Volatility could be higher. There's going to be some expectations in the end of the quarter rebalancing. So it should be very, very interesting. And from a technical standpoint, we've also got the NASDAQ to watch out for because we are now trading below a very, very critical area of support for the QQQ ETF. So again, not only from a trend line perspective, but also from the moving average perspective on the weekly chart, we are trading below those levels. So it should be really, really interesting where we end up and how we actually end up trading today. So Apple begins making the iPhone 14 in India, marking a big shift in its manufacturing strategy. So Apple on Monday said it's assembling its flagship iPhone 14 in India as a US technology giant looks to shift more production, some production away from China. And Apple's main iPhone assembler, Foxconn, is manufacturing their devices at its wow, that's a pretty difficult word. Whatever. That factory outskirts of Chennai, and Apple has been manufacturing iPhones in India since 2017, but they were usually older models, but they are going to be doing this for the first time for the new model lineup. That's going to be iPhone 14. I should be able to say that. I am from India. Why can I say that? This is such a difficult word. Striperum. God. That's difficult. Anyway, so the science traders are watching to signal the stock market has bottomed. Here are some things. So are we neither bottom? The market is seriously oversold. We know what the market needs in order to steady itself. Rates stabilizing, inflation stabilizing. We got the next CPI print on October 13th. We've got earnings commentary that does not force wholesale revision for earnings estimates. Earnings season begins in about a few weeks. So again, earnings are going to be in focus starting October. We've got a new inflation print on the 13th. And of course, there's no Fed meeting. The next Fed meeting is going to be November. And the expectation right now is going to be for 75 basis points for November. Lowry, the nation's oldest technical analysis services, notes the dramatic expansion of 52-week lows on the New York Stock Exchange, nearly 1,000 on Friday. And NASDAQ, which means investors are not snapping up against any bargains just yet. And the breadth is also very poor as the percentage of stocks above their 50-day moving averages and 2,200-day moving averages is also still really, really low at the moment. Most discouraging is the lack of buying interest. The market simply cannot put together a few strings of up days. And I think that speaks to what the sentiment really has been. There's really not been any buyers, right? There's not been any demand coming into the market right now. There's mostly been selling pressure. So it's important to understand that no matter how low prices move or how panicked investors become, it takes robust demand, not just exhaustion of supply, to cause prices to rise substantially. Unfortunately, there are no signs of that returning demand at this time, and still we went right up against the June lows on Friday, and that at least is a double bottom, and that is a reason to pick up the market. Technical strategist says he isn't sure. Given the acceleration higher in the dollar, global yields, and the breakdowns across global foreign exchange markets, it's hard not to have concerns about longer-term implications because, of course, the dollar's been absolutely ripping higher over the weekend, and the UK, which is the sterling pound, tanking to a new all-time low. Dan Niles predicts when the S&P 500 might bottom and reveals how he's profited this year. So hedge fund manager Dan Niles has revealed outlook for the S&P 500 after the Fed hiked interest rates by 75 basis points for the third consecutive time. And the founder of the Satori Fund said he expects the index to drop by 30 to 50% from its most recent peak by the end of next year. So S&P 500 hit an all-time high of 4797, just under 4800, and it's fallen over 20% since then. And our single point target is 3,000 points on the S&P 500 by the end of next year. So that's what they're really looking at going into next year. 3,000 is going to be, I think, an all-time drop of over 40%, if I'm not mistaken. So let's take a look. 3,000 is going to be all the way down here. 37%, just under 38%. That's going to be the all-time drop for S&P 500. So, we'll see. 3,500 is next support, all the way around 3,200. Those are some levels to pay attention to. We're very, very close to our June lows. And this week, if September kind of holds up to its reputation, if the last 5 days kind of hold up to their name, then I really wouldn't be surprised if we kind of breach the June lows this week, and possibly even get down to 3,500 if there's the end of the quarter rebalancing from some of the big hedge funds and money managers. The most recent survey of analysts by S&P 500 shows EPS is expected to be at around $239 for 2023 with a P multiple of 16. So we are definitely seeing some revisions on the earnings side. We've come down from 250 down to 242 down to 239 for 2023. So we're definitely seeing some revisions take place, and this will only accelerate. I think, in my opinion, this is only the beginning of that earnings revision, because as we start to see rates go up on the tail end of this year, they're going to be much higher, 4.5%, and next year they're going to be a median 4.6%. That means they're going to be possibly even higher than that. That's really going to start to break the economy and unemployment. And as a result, I wouldn't be surprised if the earnings estimates do substantially come down over the course of the next 6 to 12 months. Another really sort of like worrying news was Russian President Putin said he wasn't bluffing when he warned last week that he could unleash nuclear weapons in his war on Ukraine. Zelensky, the president of Ukraine, believes him too, and he wants to scare the whole world. And these are the first steps of his nuclear blackmail. And I don't think he's bluffing. So I think the U.S. Secretary of State Anthony Blinken also said that the consequences would be horrific. So this is, again, just going to be something that we have to keep track of. And if this is going to be something a little bit more serious than just what he's saying. So that obviously would have a significant impact on the overall, well, just everything pretty much if that ends up happening. All right, Oscar says, come on, dude, if you can't say it, what chance do we have? No, that was a difficult word, to be honest. That was really difficult. I'm surprised there's a place in Chennai that's kind of like named that, but I'll figure it out. But anyway, so going back to the markets, QQQs are, just more or less flat open here. We've got the SPY also just only down about 40 basis points. So they were selling off quite a bit. I think they were down closer to 1% pre-market, but we are seeing some buyers to step in very, very briefly. We do have a lot of speeches this week. So, as I pointed out in my other video, we got a lot of Fed members, FOMC members talking this week. And other than that, we've only got the GDP numbers coming out. So let's just quickly go over to Econ Day. We've got I think the third quarter first estimate GDP numbers coming out on Thursday, along with the jobless claims. So that is also going to be on the calendar for this week. But other than that, nothing else. We've only got FOMC members, Loretta Mester, Raphael Bostic, James Bullard, Lil Bernard, all these people talking later this week. So that's going to potentially create some volatility for the markets overall. Yes, make sure that you drop a like if you haven't already. I really, really appreciate it. So Jari says 3,500, 3,200 levels are golden buying opportunities. Yes, so we were talking about, Oscar and I were talking about this today. I think there will be significant, in my opinion, if the markets do end up coming down 40%, 50%, for example, the S&P at 3,000 will be down 40%. The NASDAQ sub 10,000 will be over 40% from all-time highs, almost 40%. These are, in my opinion, are going to be one of the best buying opportunities in our lifetimes, because you don't necessarily see the markets down 40% from all-time highs every single year, right? That's very rare. And the valuations would be a lot lower. Markets would have de-risked substantially, kind of pricing in for a lot of different types of scenarios, including a recession, in my view, if the markets do end up selling off an additional 15 to 20% from here. So there will be a lot of buying opportunities for, of course, if you got a longer time horizon, say 3 years, 5 years, 10 years out. So yes, that's something that we'll be paying attention to. But right now, still trying to understand where earnings are going to go with respect to where interest rates are going to be. All right. Caddy, we should be grateful and praise Jerome that he is being so generous, giving us so much opportunities to buy great companies at steep discounts. Yes, I think that is true. I think with him raising rates, and again, this is something that we were discussing earlier today, is that the best time for the market really is going to be, for us to keep generating income from our jobs and also asset prices lower. If the market stays low for longer, that only gives us an opportunity to accumulate and dollar cost average, right? The last thing anybody would want is to buy and the prices to keep going higher and you keep overpaying and keep sort of like chasing the markets on the way up. The best thing would be markets are selling off or the markets are stable, they're lower, they're a lot lower than, say 6 months ago, and we're able to accumulate in dollar cost average. Of course, in this environment, we just have to be a little bit more careful considering the markets can, further fall even more. So just be patient. There's no rush, absolutely no rush to just jump in every single day. There's a red day, to keep buying. Just be patient, wait for your buy targets, wait for your fair values. In the meantime, you can actually start looking at trading options or selling puts or selling calls to hedge. You can look into some other strategies as well. So Tony says, if earnings are okay, stocks go up. Well, if earnings kind of hold up well in the third quarter and they guide for good fourth quarter numbers, then I think that would be, some strong catalyst for the markets. That means that companies are still weathering through a very, very tight environment and they're still able to generate strong earnings. But, looking at the first and second quarter, I doubt that's going to happen because in the first and second quarter, interest rates were nowhere near close to where they are right now. And in the fourth quarter, starting October, there will be nowhere near close to where we will be at 4.5%, right? At the tail end of this year in October, starting December pretty much, we're going to be at 4.5%. So that's actually going to be affecting a lot of things in many different ways. So in the first and second quarter, we actually saw decline in earnings for the S&P 500. If it weren't for energy, S&P 500 earnings would have declined on a year-over-year basis. So think about it this way. When interest rates were as low as 1.5% and 2%, earnings already were declining. They were already deteriorating if you weren't including for energy. Energy was the only thing that kind of held us up. Now, interest rates in the second half of this year are way above 3.5%, closer to 4% by the end of this year. So what would happen to earnings in that situation? They would be very, very weak, right? So I doubt they're going to be strong. And on top of that, you've got the foreign exchange factors affecting global corporations. You've got the dollar just absolutely parabolic, just not giving any, literally not caring about anything, just going straight up, okay? Crushing all the currencies in its way. So that's obviously putting a lot of pressure on, global trade, and of course, U.S. companies that do a lot of business globally, because emerging market currencies are just getting crushed in this environment right now. So, the UK GBP hitting a new all-time low against the dollar is just absolutely crazy. I mean, it's getting back up to 1.08, but the low was 1.03. This is, the lowest level that it's ever traded at. So Musicville says, the great crisis is coming. Retail investors, those who's been buying the dip, will be crushed real hard. We're all in real deep shit, honest truth. Yeah, I mean, when it comes to recession, I think there is going to be, if it really depends on how aggressive the Fed is going to be, right? If they keep raising rates, then yes, we're in due for some significant pain. And, I was talking about this with one of our members the other day, that it's, when that actually happens, when there is going to be a recession, whatever that is, when that official recession happens, you're not going to feel like buying anything. Like around you, you're going to hear stories about companies going bankrupt, people getting unemployed. It's going to be a scary time. Like you're going to actually feel the fear. Like no kidding, you're going to feel the fear when that time comes. It's not going to feel like, you should be buying. Absolutely not. But again, you just got to wire your mind in a way that when there is those types of crises, when there's that level of recession fear, and of course the markets would be in absolute destruction mode, that's when you get the best deals. That's when real wealth is created during recessions and bear markets. People who have the cash during that time are the ones that actually, end up absolutely making a killing over the long term. So my goal, and I was going to mention this in our Discord later today, is to just increase your buying power, keep raising your cash exposure if you can, and just be patient and wait for opportunities both in the equity markets and in the real estate market as well. So if you've been waiting to buy actually real estate too, that is something that you can find good deals in 2023. You just need to wait for that overlap for when the prices are low and the Fed realizes that there is a recession and they start cutting rates so that interest rates also come down to more reasonable levels. So that overlap with when that happens, with both home prices are lower and interest rates are lower, is going to be the time to absolutely pick up, real estate. And of course, at the time, equities are also going to be much lower. So, yeah, that's what I think. The window of opportunity is going to be over the next 6 months. Yeah, Kevin says the time to buy is when you feel like puking. Absolutely, it's actually gonna feel scary. Like it is. You're gonna feel like you're throwing money into a fire pit, but that is so counterintuitive. So what was it during the Great Recession and how long did it last? How did the Fed handle it? So Ankur, great questions. It lasted about almost 2 years. The Fed was, again, hiking rates up until 2007. Then they cut rates all the way down to zero during the Great Recession when unemployment was really high. It took us a lot longer because the crises at that time was also a lot severe and more painful because there were actual bankruptcies of some of the biggest banks in the world happening at the time. And not only that, there was a real crisis related to the mortgage, and of course, the housing bubble and everything that was going on with the subprime mortgage market. So the crisis was a lot bigger and a whole different scale than what I perceived to be this time around. So yeah, it took us 2 years to get out of that. The Fed literally just lowered rates. There was quantitative easing at the time as well, but it just took us a lot longer because of the severity and the extent to what was happening before we actually ended up in that place. So Victor says, Kevin, sharing wisdom in a way that is sticks. You nailed it. Yeah, Kevin's been around. I mean, he's actually experienced the dot-com bubble and the Great Recession. So he's got a lot of experience, folks. Definitely pick his brain whenever every chance you get. All right, so 12 more minutes left for the markets to open. Volatility here is higher. It's up 6%, so we're above 31 now. So that's very good. We're waiting for the 35 to 40 levels. That's one of our technical indicators that we're paying attention to. So if you get up to 35, 40, again, S&P could hit and breach their June lows. So does the Nasdaq. We're pretty much about a few percentage points away from those levels. But volatility again over 31. That's going up a little bit, and 35, 40 is what I'm watching next, up over 6% today. All right, let's see here. Chris, when a crash happens, how do the P ratios look? Where they low at the moment or look low now looking back? So Chris, a great question. So right now for specific companies, for different companies, P ratios are at their lowest level since ever, like since they've been a public company. And I'm talking specifically about, some of the more large cap, big tech names. Can't speak for like smaller, obviously can't speak for every company, but the ones that I've been analyzing from a more big tech standpoint, P multiples have definitely come down quite a bit. Now, that doesn't necessarily mean that there's immediately a buying opportunity. We also have to account for how this recession is going to affect their earnings growth in the future. And I actually saw an article earlier today, which was on Seeking Alpha, that pretty much mentioned Google. And the lowest buy target they put on Google was $75. And the way they basically came down to that price was by understanding that there's going to be no growth, so 0% growth on a year-over-year basis for Google in bottom line earnings, and giving them a 12 times P multiple, and thereby approaching at a $75 buy target. So my fair value, again, they're only doing that for the next 1 year. My analysis includes for the next 5 years, considering that they're going to still grow, but obviously at a much lower pace. So that gets my fair value down to $92 is what I'm waiting for. But they had a price target for, again, just doing 1 year base analysis was $75. So, but Google is right now trading at its lowest P multiple ever that it's been a public company. So is Meta, so is, I think, PayPal. And then NVIDIA, we'll have to take a look at. NVIDIA has definitely been coming down as well. There's just been a lot of big tech lot of the companies just hitting new 52-week lows and aggressively selling off. Nishant, you're expecting VIX 35 today or this week? I'm expecting sometime this week. The VIX gets up to 35. Again, we've got end of the quarter rebalancing. So last 5 days of September, usually known for the most volatile times. Caddy, because UK currency sucks at the moment. If you're from the US, buying UK stocks could be good direction to go for. Yeah, that's definitely something that we can look at for UK stocks. Let us know which ones to analyze that are in the UK market that are listed there, and we'll definitely see if we can do some analysis on them. Let's see here. Do you know any source or paper that gives figures for US government future interest payments taking into account actual and future rate hikes? This can be a good analysis starting point. Yeah, that can definitely be a great analysis. I'm pretty sure that something like that might be available on the Fed's website or on the US Treasury website. I'm not sure if they actually will provide a future payment plan of their debt, but I'm sure they'll provide like a good guidance on what they have, what their interest rate is, and of course how much they've paid so far and the current levels of debt and interest payments and so forth. So I'm pretty sure US Treasury might have that. I'll see if I can find it. All right, just reading some of the comments here. So Arif, is it still too early to buy even if they are sitting or hitting 52-week lows? So 52-week lows on an absolute basis, again, doesn't necessarily mean anything, right? You can have a stock down 70% and still be overvalued. You can have a stock down to 52-week lows and still be overvalued. You can have a stock rally 100% and still be undervalued, right? So just these absolute terms, 52-week lows or down this much and down that much, doesn't necessarily mean anything. You have to look at it from a more relative perspective and also from an underlying perspective on how the valuations changed for the company after the stocks dropped so-and-so, right? So look at the earnings and look at the growth rates and is the stock price now justified after coming down 40%, 50% or coming down to 52-week lows versus where it was trading before. So again, focus on the valuation. At the end of the day, fundamentals and valuations is what really, really matters. And not so much the stock price. The stock price can move on sentiment every day. I mean, think about it, right? Stock price changes 252 times a year, but the company's fundamentals only change 4 times a year, right? If you think about it for a second, why would the stock price, and stock price changing means the company's valuation's changing too, right? Because the market cap is changing. Why would the market cap of any company or the value of anything change over 252 times, even though the underlying fundamentals only change 4 times a year? Because that's how many times they report earnings. It's all sentiment, right? It's mostly driven on sentiment. It's mostly driven on what those future earnings and anticipation of what those future earnings and cash flows and revenues are going to look like. So the stock price in itself on an absolute basis may not be the best measure of how the company is doing. Sure, it's going to be the best measure for you if you're trading, if you're looking at technical analysis, but from a more fundamental standpoint, it's going to be the worst thing to be looking at. The best thing would be the actual company itself. So Alex, many stocks don't have valuation due to no earnings. Then how do we decide what is the good value price? So great question. Then you look at sales, right? You look at revenues, you look at margins, and then all it comes down to is how quickly can they transition from being a non-profitable company to a profitable company. And what is the key there? What is the one word that I've mentioned in our channel that takes a non-profitable company to a profitable company? What is that one thing that takes the company there? I mentioned this before, pop quiz. You know, what is that one thing that you need to kind of more on a qualitative basis you have to analyze for that company? More on the qualitative analysis that, okay, can this company do this? Let's see if anybody's got it. It's a pop quiz. Dixon says earnings. It actually is not earnings, but it does start with E though. It does start with E. So the question is, what takes a company from non-profit, like it's a company that's not generating a profit, to profitability, right? It's a qualitative aspect. Execution. Victor's got it. It's execution, right? Andres got it as well. Execution, right? So that's what you have to analyze. If you're looking at a company that doesn't generate profit and has only sales and margins to go for it, then you have to do a little bit of a qualitative analysis on the management and figure out whether they have the execution to eventually turn a profit. So, Unger says, never liked the surprise test. But yes, execution, and it becomes more qualitative analysis aspect, right? Because you can't measure execution. You can't quantify it, right? You can't put a number on the management's execution ability, right? It's only something that you can sense. It's only something that's a gut feeling, right? You can look at their LinkedIn, you can look at where they worked in the past, look at all their projects they've been a part of, and get a better sense of whether they can execute or not. Tesla at the time, when they were not generating profit, people who bought in took the most risk because the company was on the verge of bankruptcy. Had Elon Musk not executed the way he did, the company would have been bankrupt. But because he executed really well, the company became profitable, and the company, literally the stock, had such a massive reward for all the investors that got in before the company executed. So execution is really, really important for every company that is not profitable and is on the path to becoming profitable. Yeah, you can look at past guidance versus actuals as well to judge execution. Very fair point, very good point. Look at the past revenues, look at the past margins. But another thing is that if you're looking at non-profitable companies, companies that don't generate any profit or earnings, then you want to make sure that the earnings are actually shrinking, right? You're actually generating net loss, but if they're shrinking, there's a path to profitability. You don't want a company that's just, even though the revenues are growing, but the cost is growing with it. Like they're making more money, but they're spending more money at the same time. You don't want that, right? You want margins expanding, and eventually there is clear path to profitability. Otherwise, unfortunately, I'm going to call out some companies, but there's companies like Fubo TV or DraftKings that are consistently burning more cash as they're making more revenue. So, so keep that in mind when you're looking at, past guidance versus actuals. Alex, I guess that for you, AMD has one of the best executions. So far, yes. I think AMD has done really well. I've traded it plenty of times. All of last year, traded it. This year, I've had puts on it. Cash ticket puts, again, bullish on the stock. But yeah, I think it's done really well. And the more established the company becomes, the less I feel like execution matters. What matters more is just innovation and the ability to retain its moat in the long term. Like for example, Apple, right? Apple is very, very established. Execution is not the problem here. They've really executed well over the last 10 plus years. What matters now is consistent innovation and just the ability to retain their moat that they have in the market. That's what they have to focus on. Execution, we know Apple's known for execution. They're pretty established. So is Amazon. So is Nvidia. So is AMD. So is Tesla. So is a lot of these large cap tech names. They're established. They're profitable. They're strong free cash flows. Execution's good. They just have to innovate consistently and retain their moat. All right, let the games begin. So let's see. We got about a minute left. I'm going to quickly switch over to the indices. The QQQ is dropping a little bit. We got 26 basis points down here, and the Dow Jones also right now here dropping a little bit. The 10-year yields are up over 1.5%, so we're just over 3.745%. So we got the yields hitting a new 52-week high, almost at 3.8%. We got the dollar hitting a new 52-week high. Those two are absolutely going to put some impact on the equities market. And crude oil just hovering around $80. So just under $80 a barrel. Resistance we've got at 81. So big resistance there. And support level is going to stay put at 76 to $77 per barrel right now. And volatility is definitely on the move, up over 6% right now. Bitcoin hovering around 19,000, and Ethereum also just hovering around 1310 right now. All right, here we go. Make sure that you also vote if you haven't already. I'm going to close the poll here in just a minute, but last time I checked, it was 60% expecting the markets to be red today. S&P here opening down 40 basis points. We got the Dow opening down 45, and the NASDAQ here is going to open down about 25 basis points right now, I think. So there we go, 30 basis points, 10,800. And we got the S&P down 44 and the Dow also down about 0.5%. So I'm going to end the poll there. We got 50% red. Okay, so 414 votes. I'm happy with that. 50% expecting the markets to be red, 40% expecting green. We'll see. I mean, technically speaking, wouldn't be surprised if we do see a little bit of a intraday momentum to the upside. But from a more big picture standpoint, we still have a lot to deal with. We got Nvidia down 75 basis points. We got Apple here just at 150. And Tesla is down about 1.5%, 271. So from our poll from last week, I think 275 is done, right? People expecting 275 as the lowest that Tesla's going to go to. They're out of that race. Next is the battle between 250 and 250 pretty much. If it breaches 250, then we are possibly looking at folks who predicted that Tesla is going to come down to 200 as the lowest price that it possibly gets down to. AMD right now at $68, slightly higher, but Tesla really is pulling back on the day quite a bit. It's down about 1.6%. We might see some buyers intraday. We'll find out soon enough, but it is one of the big underperformers here when it comes to big tech right now. And Apple really has held up very well. I think Apple and Tesla were the two stocks that were outperforming over the last couple of weeks here, so they've done really well. But if Tesla starts to drop further, and so does Apple, those are kind of like the other shoes to drop here for the markets that can lead to more potential downside, just considering that those were the two that were kind of holding up the markets really well. Dewey says, hate to admit, but I voted for 200. Mill says, voted for 200. Great. That's great. If it comes down, I mean, we're only going to be excited to buy more, right? So that's going to be a great price for Tesla. Biotech shooting higher. Let's take a look. XBI, well, it's 0.5%. Wouldn't necessarily call it shooting higher, but right now pushing up pretty well. So we got the entire watch list for the most part. That is, well, it's kind of mixed. So starting with the reds, we do have InMode down over 2.7%. We got AMC down over 4.5%. We got Logitech, Tattooed Chef down to $5.20. Fubo 420. We got Astrospace, Truly is also down about 0.5% right now. Vertex 282. Zim is down to 24.77. So just consolidating sideways there. We do have some stocks pushing higher. I mean, Upstart's up 2.7%, kind of bouncing off of that support here, roughly in the $20 range. Then we got Mara pushing up 3.8%. DraftKings almost 3% in the green. Fiverr's pushing up. Coin, DocuSign, Alibaba. Alibaba's really been coming down, right? Alibaba's been under a lot of pressure. Lots of Chinese stocks have been under tremendous amounts of pain here. I think Tencent just hit a new 52-week low the other day. So if you come over to this, I think we're just bouncing off here. Yeah, so pretty strong bounce after Wednesday, but Friday. But Friday we were down to as low as $34. So new 52-week low for Tencent on that day. And then JD.com just up 3.3%. NEO also pushing up 1.5%. Li Auto pushing higher. So China's been a little bit back and forth here, more weak than strong here. It's kind of been like one of those sectors that one step forward, two steps back for most Chinese stocks. Yeah, AI Day is coming up, so we'll see what happens on the 30th. I think historically Tesla's been a little bit more volatile. Of course, after AI Day, I think it's sold off in the past, so we're gonna be careful about that. But right now pushing back higher, 273. Any level for InMode you would buy at? Pretty much watching $20 again. That's a level that I would be interested in. There goes the power. But yeah, $20 again is going to be that low. I mean, we would have perfectly caught this rally, 85%, and it's crazy that it's coming right back down. And if it comes down to $20 again, then yeah, I would be very interested in that stock once again. So Nishant, thoughts on SoFi? I'm actually thinking about selling a put on SoFi at $5. $5 strike on SoFi is actually, I think, going to be decent premiums. So let's see here. Let's just wait for this to load. $5 is going to be 34 cents. So if you do the math here, 466 is going to be the cost basis, and that is a 7.2% That's not bad at all. That's actually really, really good. That's such a good return. 7.3% for 1 week, for 1 month. Yeah, I might do that. I might do that today. So I'll be thinking about that. But I got to do it fast because the stock price is going higher. Premium is going to really go down very fast. So let's take a look at AMD, because AMD actually had a little bit of a breakdown from a head and shoulders pattern. So I was looking at this the other day, and this is the monthly chart, right? Let me just go over actually the weekly chart. This is the weekly chart, and tell me this doesn't look like a really, really bearish head and shoulders. It took a while to kind of formulate this head and shoulders. Like, you know, there was a very, very small head and shoulders over here. Like you can kind of see it, that there was like a left shoulder, a head, and then a right shoulder. If we didn't quite break down, this was back in May of 21, we didn't quite break down, but instead we ended up rallying 100%. This is a 127% rally, and then just a massive shoulder here, and then a little bit of a right shoulder, starting to see a breakdown for AMD from this head and shoulders. So we'll see, you know, what happens with AMD, because it's only accelerated after last week. It was down over 11%, so it should be interesting how it ends up trading. All right, looks like the markets are actually turning green very, very strongly. We got 63 basis points higher for the NASDAQ. S&P is up 10 basis points. The Dow is up over, well, flat. Tesla, green, 275. We got Nvidia, green. AMD also green. Apple, green. Meta's up 1%. Netflix is up 1.25. Amazon's up 1.27. So there we go. Lots of buyers finally stepping in here. Skyman says, Caddy, keep dreaming of buying Tesla. Hey, I already have Tesla. You guys keep forgetting that I have Tesla shares. I already own Tesla. It's just me wanting to be cheap to buy more. That's what it is. Me wanting to buy more. That's all it is. But I already have Tesla, so I'm good. And if it never gets down there, hey, so what? You know, I'm just going to wait for the fair value, you know. Alex says being cheap might miss the boat. I already have it. I already have, so I'm not missing out on anything. I already have Tesla shares. And I've got a couple puts too that will profit if Tesla keeps going higher. So I'm all for it. Sarim says the day might never come. Get the Tesla car instead of the stock. Yeah, no, car like too expensive for me, man. I'm not spending that much on Tesla right now. Caddy's waiting to go dumpster. Yeah, that's what I'm doing. Like I'm trying to wait for dumpster prices, you know what I mean? Danny, I think that's a great way to put it. That's exactly how I would put it. People don't understand of concept of waiting. If Tesla goes up, that's great. You have shares. Exactly. Like I have a position. If it goes up, great. If it doesn't, if it comes down, great. I buy more. You know, that's the whole idea behind it. Like the only thing is that I don't want to be. Of course, it's gonna be different for every person. Fair value, and of course, what you perceive to be very, very strong deal for everything is gonna be different. But for me, if I'm patient enough to buy more at lower prices, then I'm just simply gonna be waiting, and I can even sell puts, you know, for that stock for it to come down. If it doesn't, then I get to keep the full premium. If it does, great, I buy more. Any chance to look at RWL? So we do have buyers stepping in, everybody. We got the NASDAQ now up over 70 basis points. So again, the first 15-20 minutes, let the volatility kind of settle in, and then the real direction will pay attention to where we end up. But let's see if I can open up the SPY and QQQ charts here as well. So QQQ's got a big resistance at 280. So we kind of broke down last week below that level. So we gapped down, continued to sell off. And 280 is going to be that resistance now. And 269 is going to be that support. And this right here is going to be SPY. So we're watching 371 as that next resistance and 362 as a support. Alex, are you seeing a lot of Teslas in Delhi area you are living? No, not a single one, because the import, getting a Tesla imported here is just going to be a complete hassle. You'll end up paying double the price in custom duty taxes. So it's just well, import duty taxes. So it'll just be crazy. So I've never really seen a Tesla here in my area. But yeah, those right there are going to be some levels to watch. Let's take a look at RWL. Okay. So, all right, S&P 500 revenue ETF, really, really low volume, only 91,000 shares, Oscar. So yeah, I would just simply be looking at something else. If you're looking at this ETF, I would just be looking at another one that might have more volume, because the volume is just like 91,000 shares is really, really low. So spreads are going to be really weird. Yeah, India also has EVs, Alex. They do have. Gavin, how do you have internet without power? I have a battery. I have a really large battery just for making sure that YouTube doesn't, it kind of live streams work. So, because the power does go out a lot here. So if I'm doing a live stream like I am right now, it switches over to the battery immediately if the power goes out. So. Humya says in Sweden, Teslas are everywhere. That's good to know. So let's take a look at the yields as well. We've got, well, the 30 and the 10, we talked about it. That's also negative. So that spread has turned negative. The 10 and the 3 month, big move, because I think the short-term yields are moving down and the long-term yields, the 10-year yield continues to push higher. So that spread has widened once again. Mortgage rates, I think the last time I checked, this thing is kind of a little bit of a lagging indicator, I think, on TradingView. But I think the mortgage rates on the 30-year are getting up to 6.7%, if I'm not mistaken. I think they're at 6.5, 6.7%. And the 15-year also closer to 6% right now. Correct me if I'm wrong in the live chat, but power going out only prevalent to your area or entire India? I thought that Delhi is one of the most advanced cities in India. Well, it is, depends on the area, but over here it does go out a lot, very frequently. I would say like I experience maybe, let's say like 7 or 8 times a day that power goes out. And it's only brief. It only goes out for like 5 minutes or so, like, 3 to 5 minutes. So it's not like crazy, but yeah, dollar is on the mission to the moon. The DXY definitely it continues to move up. On the 4-hour chart is just like going absolutely parabolic. Almost at 140. Well, the high was 114.5. 120. I think a lot of people are eyeing that 120 level, which would be absolutely crazy if you get up to 120. That's the level from back in 2001. So. How many people here think that 120 is possible on the dollar this time around? You'll notice that we got a little bit of falling wedges here, then a couple breakouts, and this right here was a big breakout from this resistance for dollar, past the 101, 102 level, and 120 is what everybody's kind of watching right now. So let me know in the live chat how many people believe 120 is possible on the dollar moving forward. So, Sirac, Las Vegas, can you briefly explain options trading for us newbies, or do you have a video already on it? Yes, I do have a video. If you simply search on the channel just options or option strategies, you will be able to find very, very beginner-friendly tutorials on options that I've done a couple of them. But if you want like a full, playlist of tutorials, we have several of them on our Patreon as well. So those are like private videos that we have talked about different strategies and options trading. So that is also available. All right, yes, 120, absolutely, yes, 120, yes, yeah. So dollar definitely has the momentum going for it. Just parabolic breakout here. All right, so we are seeing a little bit of the momentum kind of roll over and the pattern kind of fade here. We got the NVIDIA down in the red. We got AMD also red. Tesla just flat here, just over 276, but consolidating sideways. And some individual stocks also kind of rolling over at the moment. Dude says, no, it's cool. Power only goes out like 8 times a day. Yeah, that might be a lot for some people, but it's like the normal, like it's very normal here. Well, I might be exaggerating with 8 times. It might not be 8 times. On some days when it's like the weather is really bad, then sure, it goes out like 8 times a day or maybe more. But most normal days, I would say like probably like 4 to 5 times. All right. Shri says, who are you supporting the World Cup this November? Portugal, man. Come on. Portugal, without a doubt. I've got a big Ronaldo fan over here. Portugal is going to win all the way. This is it. This is what's going to happen. Alex says, if almost everyone knows how good AMD is, why is it keep going down? Don't they know it is really good value at this price? Well, that's where you get discrepancies in the markets, right? That's where you get inefficiencies in the markets, is when, you know, the stock price keeps coming down, but the company itself is really good. So I do think that there is some type of discrepancy there with the price versus the actual company for AMD. And that's why, think about Google too, right? Google is coming down. Why? Because, well, the short-term sentiment is not good. And it's obviously the stock chart has been really, really weak. But I think it's a great value under $100. So Raul, you work full-time? Well, yeah, pretty much I work doing this full-time. Portugal versus Argentina and when they share the cup. That would be nice. What do you think about PayPal? Is it good value? I'm a new buyer. So PayPal, I would prefer, again, in the 70s, not really at the moment. So I've got some analysis there on PayPal. So what I have over here is there was a falling wedge for PayPal, which is, you know, in reality is like a bullish reversal chart pattern. And that falling, you know, wedge pretty much got a nice breakout. This was a big breakout for PayPal. Past this level, we came down to $70, low 70s. We got a nice breakout. And what I have right now is a possible bull flag formation. So this is something that, again, I will be sharing with everybody in our Discord. We'll do some analysis on that for when the idea completely formulates, for when the stock price actually moves up. Because I do think there's going to be, you know, good risk-reward trade-off here from a trading perspective, not from like a fundamental perspective, because I do think the valuation is going to be a little bit lower for PayPal for when it becomes a really good buying opportunity. So yeah, that's the analysis on PayPal right now. So Alex says there are discussions on China tariff removed. That could change all, the CPI will drop. So yeah, I mean, that could definitely help inflation picture and help us, you know, kind of stabilize a little bit on the prices. So Pedro says Portugal, yes. So Octa, Ramkey, I've actually done a video on Octa. Make sure that you do check that out if you haven't already. Did that video not too long ago on Octa and the complete analysis on them. So that's going to be on the channel. So you can search that up and you should be able to get the full fundamental and technical analysis on the company. When's the special guest show? I recall you mentioning, yes, it's going to be in October. Again, just starting probably in the first week of October. We should be able to get that out, but if not, then definitely in October, sometime in October, we will be able to do that video. And we'll do more guest speakers in the future, I promise. It's just that September's been like really, really hectic. I honestly am waiting for this month to be over so that we have more time on our hands to do other stuff, because the last 3 to 4 weeks have just been absolutely crazy. Not only from a market perspective, but also just because I've been creating a separate project, which is going to be launching October 1st. So it's going to be coming out very soon. I'm super excited to share that with all of you. So let's see here. So yeah, when is Ray Dalio coming? Oh man, I'd love to have it on board, but it's not Ray Dalio, unfortunately. But I definitely would love for if and when he can actually make time for us and come on the channel. Because there's just so much macroeconomic value that we can extract from him. I feel like there's so many questions that I think are going to be worth asking. And his perspectives is going to be really, really good, I think, on the market. All right, Tesla up to 280 right now. We got Apple pushing higher. We got Nvidia up here. We got AMD pushing higher. So a little bit of relief there. Nasdaq's up, almost 80 basis points, 85 basis points. It looks like we are seeing some buyers to step in at the moment, at least the start of this week. So I think we might, so we still have a little bit of ways to go before we kind of push back above that 200 SMA. So that's going to be sitting at 11,100. So Ash, if I buy Google today, so do I consider the value of the USD when you're looking at fair values? Well, yes and no, like not necessarily considering from a perspective of, what foreign investors are going to be paying, if that's your question, but really just looking at it on a fair value basis, like on an absolute dollar basis, what the fair value is going to be. And then we also have the 10% margin of safety kind of built in to the stock. So in reality, Google's fair value would actually be in the hundreds, but we've also got a 10% margin of safety built in, which brings our fair value down to $92. So that does account for a little bit of foreign exchange risk, but not specifically for every stock right now. So Vinay, how much cash do you keep on the sidelines? I mean, how much percentage of your total portfolio value? It varies. Depending on how the markets are doing. It kind of varies between, I would say, like 8% to as much as 20%. The last, I think, couple months here, we've been talking about how I'm personally been a net seller of stocks, right? And as the VIX has been really, really low, you'll notice that this pretty much represents how I'm going to be a net seller of stocks. So I've actually been raising more cash than usual. I got up to, I think, as much as 16 to 18%. And, with looking at the big picture, my goal would still be the same to, keep a little bit of cash on the sidelines for more opportunities in the future. Even if the market continues to kind of rip higher, that's completely fine. I just don't want to overexpose myself on the downside. And right now I'm just, 14 to 16% is going to be that level. I will continue to kind of increase that more over time. Caddy, can you have Ray Dalio handle your $500 million portfolio? Then I'm sure that he will be your guest for all of us. Yeah, $500 million. Yeah, right. Robinson asks, bull trap. Well, I think the markets are really oversold. I think we are seeing a little bit of a, just a oversold reaction to the markets here. Because look at the 4-hour chart, really, really oversold. I mean, the RSI is just kind of recovering back higher. So is the MACD. And lots of stocks are or have been oversold. So I think we are seeing a little bit of a pushback higher, but again, I'm not going to be super optimistic going into the last few days, like Wednesday, Thursday, Friday, as we kind of close out the week in the third quarter, because, well, that can create some more volatility. So Gabrielle, yes, I will be doing a video on that. I'm actually planning on buying more very, very soon. So we will be doing a video on that very soon. So don't you worry. I have you covered for meta analysis. Yeah, so great stock Vortex. It's a great way to put it. When the market is in a bull market, I raise more cash. When it's in a bearish market and going down, I hold less as I DCA. Yes. So Imran says, why do I look sad today? Well, because the markets are going higher, man. I'm just kidding. I don't look sad, do I? I just feel like I'm really tired. That's all. That might be it. I just got done with the workout earlier. And then I'm just like really exhausted, to be honest. So yeah, but I don't think I look sad. So, all right, very, very strong day so far. We do have our entire watch list very nicely green. For the most part, there are still reds. AMC is down. We got Vertex pulling back, American Towers Zim Integrated, Yum Brands, Visa, all of them kind of pulling right back down. But for the most part, we do have a lot of greenery at the moment. Amazon's up 2.25%, so very strong move on Amazon, and Tesla also pushing higher. Is Zim oversold? Yeah, so technically it is oversold, but that doesn't make it, something that I would necessarily pick up from a more fundamental standpoint, right? I mean, definitely it's oversold without a doubt. It's just been selling off from $48 down to $24. It's down like 50% just in the last few days alone. I mean, RSI is down to 17. It continues to make these lower lows. So there's no bullish divergence. The MACD is definitely oversold, but yeah, I'm watching $21, $22. Pound is dying. Yeah, Miguel, absolutely. The UK pound definitely getting hit pretty hard, tagging new lows. By the way, guys, make sure that you do drop a like and, of course, subscribe to the channel if you're not already. Got 146 likes right now. We got over 550 people watching, so make sure that you drop a like. Let's see if we can at least get up to over 300 likes, and also subscribe if you're not already, all right? We're getting very close to the big number, which is 70,600, So we're definitely getting to very big numbers here in terms of subscribers. So make sure that you subscribe. All right, thoughts on GNRC. Let's take a look. What is that company? Generac Holdings. All right, so down from $525, so definitely been selling off. Ooh, it's a profitable company with growing revenues. That looks promising. All right, so we do have some analysis. Looks like we had a little bit of a negative divergence in the stock back in November. So you can see the price was actually going higher with the RSI actually moving down. So we had a bit of a bearish divergence or negative divergence, and the stock prices definitely followed through on that divergence, down 68%. Let's take a look at the fundamentals here. 22 times earnings after the sell-off here, under 3 times sales and 73 times cash flows. Let's see, balance sheet, they're sitting on about $936 million of net debt, which is not bad. Only $1 billion worth of debt. And cash is around, 147 million. So they do have quite a bit of net debt here. Let's take a look at their earnings. Wow, so they're actually expected to grow earnings. $12.15, $13.74, $15, $18. Revenue is expected to grow too. This feels like a really promising company that we can possibly analyze in the future. Valuations decent. Earnings expected to grow, at least on a forecasted here basis. And of course, revenue also expected to go higher. So I like it. It's it's really oversold right now. Trading below the moving averages, of course. So I mean, I would pay attention to this support here at 166. But we're also just, making lower highs and lower lows, of course. The pattern overall is really, really bearish. So I'll add it to our watch list for stocks that we need to analyze in the future. GNRC. But yeah, thanks for mentioning it. Jason says new all-time highs are coming. Don't miss out. Well, the markets do actually bottom before recession starts. So, if the recession starts, let's say, like officially, whenever NBER decides to actually announce an official recession, when do most people think that the official announcement for a recession is going to come through? Is it going to be Q4 of this year, Q1 of next year, or Q2 of next year, or absolutely no announcement at all? What does everybody think for when that's going to happen? All right, Tim says Q4 of this year. Rates are definitely going to be higher. Well, right now they're at over 3%. By the end of this year, they're going to be over 4.4%. So we're definitely going to see quite a bit of an impact on that. All right, so we got, Kevin says no announcement. The audacity for the administration not announce a recession, even though things are going to be brutal. Man, that's going to be crazy. Jason also says never. Wow, interesting. March 23, Q1 23, Q1. Yeah, lots of people are expecting Q1 and Q2 as well. Yeah, Oleg, I mean, we already are. I think we all understand that. I think when is going to be that announcement, though? Look at the NASDAQ crawling back up to 11,000 slowly and steadily here at 1%. Here we go. Tesla's almost back up to 280 here. Nvidia here up another half, well, almost 1%. AMD pushing higher, Apple pushing higher. Amazon's up over 2.5%. So, not bad. We do have some buyers stepping in. The bulls are showing what they're made of in September here, the last week. Even though the bears are pretty much controlled the entire month, we're gonna show them. We're still down 7% on the Nasdaq, but we're gonna show them. We're gonna show the bears. Jason says Amazon 10% coming soon. Man, I'm pretty positive you got calls on Amazon, Jason, don't you? You're really bullish on Amazon today. But yeah, 125 is going to be that next resistance. That's going to be that level. Definitely, you know, very oversold. Look at the RSI, look at the MACD. So nice technical bounce here for the price itself. So 125 is going to be that next level. All right, everyone. So thank you so much for joining in. I really appreciate it. Make sure that you drop a like, of course, if you haven't already, and subscribe to the channel if you're just joining us for the first time. The market's doing really well so far. So far, so good. Especially the NASDAQ is. The Dow is still kind of finding some momentum, still down in red, with the S&P's only up 17 basis points. So you can see the divergence there, right? I mean, NASDAQ's up over 1%, and the Dow is down 30 basis points. So you can see where the money's flowing to. Right, the money's pretty much going to the NASDAQ and tech stocks right now on the day. So pretty big divergence there. The yields are still on the move, up over 2%, getting up to almost 3.8%, and volatility is coming down, but still up almost 3% on the day. So be careful. Obviously, you know, just look at your buy targets, look at the big picture, and obviously don't FOMO into these rallies because they can definitely be a little bit of a fake out as well. So thank you so much for joining. I really appreciate it. Make sure that you drop a like, subscribe, and the links to our Discord, Patreon is going to be down in the description below if you want to join. Of course, be a part of our money investing community and get access to all the alerts and private videos, and of course PDFs and downloadable spreadsheets and all that stuff. So thank you so much. Hope you all have a great start to the week, and happy investing. I'll see you all in the next live stream, which is again going to be tomorrow.